The Dow prepares to wow. It could be just minutes from reaching a record high, plus how Google has become Wall Street's $800 gorilla. Hey everyone, I'm Lauren Lister coming to you live from the NASDAQ market site in Times Square. 4 stocks you'll want to watch today coming up in just a minute. But first, this morning's business headlines. Today may well be a day that goes down in Dow history. A record high is within reach. The Dow ended yesterday's session at 14,127. That's just 37 points shy of an all-time high. And for much of the morning, futures have been up some 30 odd points. Now the magic number to beat is 14,164. It was set back in October of 2007. You know, the good old days before the economic meltdown. The blue chip index has been sitting within 50 points of setting a new record for a week. So will today be the day? Thoughts from senior columnist Mike Santoli in just a few minutes. For now, on to Fannie Mae and Freddie Mac. They may soon be under one roof. The regulator, the Federal Housing Finance Agency, has laid out plans to create a new company that consolidates the existing ones. A primary goal would be to combine several functions which are now performed by both companies. Now, Fannie and Freddie have operated in competition with each other for decades. They've also cost taxpayers $131 billion since the Treasury took them over in 2008. Things are so bad, meanwhile, at JCPenney. Even the people behind the store's new strategy are running for the exits. Board member and activist investor Steve Roth is trying to unload 10 million penny shares owned by his firm. Roth paid between $25 and $30 for the shares. They shed another 5% yesterday on the news that Roth wants out. That puts them at about $16 a piece, less than half their price a year ago. In a related story, Martha Stewart will be taking the stand today in a Macy's lawsuit against JCP. Macy's says Penney's violated its exclusive contract with the domestic diva. And lots of people have thoughts on Penney's this morning. On Twitter, it's one of the top stocks on Market Pulse, which measures tweets about stocks. Also high on the list is Target, Amazon, and Google, which we'll be talking about in just a few seconds. You're looking at overseas markets, and Japan's Nikkei hit a 4.5-year high today. European markets in Hong Kong in the green too. Here at home, futures are also higher as the Dow reaches for that new high. But let's look at 4 hot stocks the Yahoo Finance team will be watching for you today. We start out with a tale of 2 tech titans on totally different trajectories. Try saying that 3 times fast, but we're talking about these two, Apple and Google. Apple is up 0.3% in pre-market trading. The stock dropped another 2% yesterday, though, hitting a new 52-week low. Take a look at the 3-month chart. The markets have peeled away 40% of Apple's value since September, $285 a share. Yesterday's bruising followed a court decision last Friday. A judge chopped in half a $1 billion jury award that Apple won against Samsung. Look at that, $421 a share, far cry from where it was. Now let's take a look at another 3-month chart, this time with Google alongside Apple. Google shares hit an all-time high yesterday, and with shares more than $800 a piece, the company's being called Wall Street's 800-pound gorilla. Google shares are surging reportedly because the company's Android software is dominating the mobile phone market. In addition, the company is also maintaining its lead in mobile advertising. Google is up less than 1% in pre-market trading, but look at that, shares going into the open at $827. Now on to gun maker Smith & Wesson, which reports quarterly earnings after the closing bell. Right now, the stock is up close to 2% in pre-market trading. It was up almost 5% yesterday. Smith & Wesson's shares, you may recall, fell more than 18% after the Newtown shooting in December, but they bounced right back amid a surge in sales, and the company is now expected to report a 36% rise in revenue over the prior year. And finally, Marriott, which might seem to have a screw loose. The company is announcing a new partnership today with IKEA. Get this, the 2 companies are teaming up to create a new low-cost hotel chain in Europe. Now, the hotels won't have IKEA furniture, but in the IKEA mindset, many rooms will be prefabricated. Now, shares of Marriott, for their part, have been seesawing over the past year, but are currently within striking distance of their 52-week high. Now, let's take a look at some other critical numbers to keep your eye on. A sea of green, but take a look at gold. change coming from the White House. It wants people to be able to unlock their cell phones if they aren't under contract. Now, it's a no-brainer that most people would prefer unlocked phones. Hey, everybody wants that freedom. But should the White House be sticking its nose in the matter? Let us know what you think by voting below in our daily poll. And while you're at it, post something in our comments section. Love us, hate us, just let us know. Meanwhile, the Dow is really flirting with its all-time high. But we've heard this before, so let's bring in Mike Santoli in the Yahoo newsroom to put it all in perspective. Mike, I get it. The Dow is close to breaking this record. Remind us, what is the significance of that? Like, why people should really care? And also, what's driving that? I don't get it looking at the economic fundamentals.
Well, why does it matter? I mean, obviously, it's really just another representation that the financial economy, the markets, have actually recovered all their financial crisis losses. That's obviously significant. It means that business actually is doing okay. You know, the Dow does not represent the mood of the public. It doesn't represent the average economic experience of the average household. It represents a stream of big company profits globally, and that actually has doubled since the depths of the financial crisis, actually almost exactly tracking what the market's done. Obviously, cheap money is all over the world, and it's manifesting itself in part in higher equity prices, and that's what the Dow does represent. Now, that being said, we were here in late 2007. We were just about here in the year 2000. So when you talk about an all-time record, we were basically here, you know, almost 13 years ago without even adjusting for inflation.
Oh, that's a really good point. And I'm not even going to get into the disconnect between the broader economy and the financial economy. Let's just talk for now about what could derail the Dow reaching this record today or add wind in its sails as far as setting it.
Yeah, I mean, it looks like it's not exactly going through this record with a big head of steam. It's been kind of hovering in this range right for a while. Also, it's only the Dow and not the broader indexes that are right at that all-time high. So I think what could derail it is anything that disturbs the idea that the domestic economy is on a pretty good trajectory right now for growth this year. The housing market and auto market kind of leading the way. I do think you're going to have to be careful about the data in the next month or two. We have the jobs report coming on Friday, simply because this has been about the time of year into the spring when the economic data have kind of softened up in the last couple of years. So maybe that's the thing that'll take some time to kind of digest in terms of the markets. I also just think we have to back off a little bit just because it's been a tired move, as I mentioned. It's not been very aggressive. It doesn't show really a tremendous amount of underlying strength, more just resilience and resoluteness on the part of the index.
Now, one thing I have to say that people really didn't expect, at least most of the people I heard talking about it, was that Apple, the biggest company in the world by market cap at the time, could fall so dramatically while the greater market rallied. Now Google is hitting all-time highs above $800 a share as Apple keeps heading down. Is Google the new Apple, as in the golden child version of Apple?
It might be getting there. I do think Google is benefiting, at least to some degree, from Apple's decline, meaning that people have kind of lost faith in Apple and taking money out of that stock, almost like in an intent way, saying, get me out of this thing, even if it's at new lows. And I do think some of that money is finding its way into Google just because it is that mega cap technology leader. They seem to have a long-term growth path ahead of it. Interestingly, they both have about the same market value right now once you account for how much cash they have on hand, and Apple has 3 times the profits. So clearly Google is the favorite because it's getting the benefit of the doubt from the market right here. One thing I will say is even though you're having some $1,000 price targets come out on Google, I don't think you quite have the public mania attached to Google stock the way you did at Apple's heights last year.
Such a good point. Everybody I knew, Tom, Dick, and Harry, talked about Apple. I don't hear the same thing about Google. Thanks so much, Mike Santoli, our senior columnist. And that's it for our Hot Stock Minute this morning. I'm Lauren Lister. We'll see you right back here again tomorrow.